I just made $5 million. $5 million. That's $5 million the past month investing. As you can see, I have more than $100 million. Subscribe to my channel so I can teach you how to make millions.
Let me tell you about my day so far. Coffee in Paris, surfed the Maldives, took a little nap on Mount Kilimanjaro. Oh yeah, and then I jumped back for the final quarter of the NBA Finals. Courtside, of course. And all that was before lunch. I could go on, but all I'm saying is, I'm standing on top of the world.
Has been going up 119% the past year. Now when we look at the 5-year chart, it seems to tell a slightly different story. Why does it tell a different story? Someone asks you why. Why does Meat Group tell a different story when it looks like it's been growing? Well, that's not the full picture. It looks like it's growing when we compare it to its very lows, like over here when it was at $2.37, or over here when it was at $1, close to $2. But the issue with Meat Group, and this always happens with Meat Group, is every time it climbs to these highs, we could see it tumbling, and crashing all the way back down. So is Meat Group going to crash? Is it going to go all the way back down? Well, we can see that Meat Group, the momentum hasn't picked up as it once did in its glory days of August 2016. But have they made new changes? Have they been bringing back new people? Have they been bringing back more people to its company? When we look at the volume, we can see that the average volume is 1 million people. But when we look at the average volume, we could see that it's at 360,000. This company offers no dividends, zero dividends, zilch, nada. This is bad news. We want companies to offer healthy dividends when we're looking at them. When we look at the news for Meat Group, is there any short-term negative news? Is there any short-term positive news? There's nothing in the short term. This company has a lot of competition. We can see Meat Group competing with Tinder and all the other dating apps, Bumble. The issue is Meat. One thing about this company is that they've a certain proximity from the personification of redundant axioms presupposed upon tautological repetitions, and enhance their paradoxical paradigms through redundant innovations. Warren Buffett, the billionaire investor, once said, "Be fearful when others are greedy, and be greedy when others are fearful," by billionaire Warren Buffett. And essentially what this means is when traders are greedy, they'll keep on buying and driving the price up and thinking that it's going to keep on going up and up and up. But eventually what ends up happening is the stock ends up tumbling back down to earth from the moon because of greed. And then that's how people lose a lot of money. And when Warren Buffett says be greedy when others are fearful, what he means is that When others are fearful because the stock plummets and everyone starts selling their stocks at a discount, that's the time you want to start buying companies. That's the right time to buy. But usually, people start selling. People call it a crash, and that word crash scares people. But really, let's change the definition. Instead of crash, let's call it a discount. That's essentially what it is. A discount. That's really what it's all about. So, as we can see, the Fear and Greed Index by CNN, what emotion is driving the market right now? What emotion? Right now, the greed is driving the market right now. And the reason for that is, as we can see, the McKellen volume summarization index measures advancing and declining volume on the New York Stock Exchange. During the last month, approximately 8.23% more of each day's volume has traded in advancing issues than in declining issues, pushing this indicator forward the upper end of its range for the last 2 years. And as we can see, the stock price strength, that was the breadth. But the stock price strength, the number of stocks hitting 52 weeks highs exceeds the number of hitting lows and is at the upper end of its range, indicating extreme greed. As we can see, that's why the market kept going back up and up. As we can see, it's in the greed territory. And as we can look at the safe haven demand, the difference in 20-day stock and bond returns, stock have outperformed bonds by 2.92 percentage points during the last 20 trading days. This is close to the strongest performance of stocks relative to bonds in the past 2 years, and indicates investors and rotating with stocks from the relative safety of bonds. And when we look at the put and call options, the CBOE 5-day average, the put-call ratio during the last 5 trading days, volume and put options has lagged volume in call options by 36.82%. As investors make bullish bets in their portfolios. However, this is among the lowest levels of put buying seen during the last 2 years, indicating greed on the part of investors. And when we look at the market volatility, the VIX and its 50-day moving average, the CBOE volatility index is at 15.72. This is neutral reading and indicates the market risks appears low. And when we look at the junk bond market, the yield spread between junk bonds versus investment grades, investors in low quality junk bonds are accepting 1.74 percentage points in additional yield over safer investment grade corporate bonds. This spread is much higher than what has been typical during the last 2 years and indicates that investors are highly risk averse. When we look at the market momentum, the S&P 500